In this video, I'm going to be talking about Dollar General and Dollar Tree and why they are collapsing and how far will price fall for these two companies. Well, going to start off here with Dollar General. DG is the ticker, and what we see here is the GAN pulled up for the bottom, the lowest point ever back in February of 2010, and we pulled it across. And what happened recently with Dollar General? Well, what we see is this is the 45-degree angle, and over time, we know that price likes to kind of gravitate towards it. And sure enough, price finally hit the 45-degree angle for Dollar General. So it's looking more and more likely that this zone could hold as a support, at least for now, right? Maybe if it gets rejected again, it could roll over and so on and so forth. But everybody's worried about the collapse of Dollar General and Dollar Tree, but when I think of these collapses, I'm like, wait a minute, isn't that like a bullish sign for the economy? Because these are the places people go when they are like money constrained and they don't have anything to spend, so they come here and they do better. And in fact, they've done better all the way until 2022, right here. Then they started to fall apart, right? So it's just kind of weird how when they started to fall apart, all of the other indices started to trend higher, right? So maybe it's like a counter indicator that actually things are better because people don't need to go to Dollar General. Or is it the fact that they're not very competitive anymore? And you can go to Walmart or even a simple grocery store like Kroger's or something and get similar products at around the same price with their discounts there. So maybe they're not competitive anymore. Maybe it's not a recession economy anymore. Maybe the economy is stronger than we think, right? So that's why these stocks are really falling. But that's just the fundamental side. I'm going to stick to the charting side, the technical side, and I'm going to show you how everything was forecasted before this collapse. So it all started with this angle, guys. Look at that. This is how GAN comes in handy. It all started right here with this angle sloping up, and it was support all the way the whole time since inception, right? Since the very beginning, this has been support, 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 maybe a little bit resistance right here, but we'll just ignore that. And it's been majority of support. And this was the warning sign, guys, right here below support. And then it came back up and rejected. And the next week just was very, very bearish. And then it collapsed, right? There was a huge gap down to the blue level, and that held for a little bit. Then it collapsed. And where did things truly fall apart? And like you had a chance to get out. If you didn't get out up here, you had a chance. And that was on the back test of this blue level. Because you can look in the past, it was a support, flipping it to resistance. You can see that clearly. So once that got rejected, you would know to run for the hills and you would save all this pain, right? Because that is just telling you wants to go straight down to the next support levels. And sure enough, that is exactly what it did. So could it bounce from here? Yes. But I'm going to put on even more indicators for Dollar General, and I'm going to show you that, look, the Ichimoku was an exact confluence. I zoom in here for you. It broke down below the monthly. These are monthly candles, right? The monthly Ichimoku came back down to the blue arc, then even came back up and retested the bottom of the Ichimoku. And this is telling us completely that price was not ready to go higher. This was your chance to get out if nobody got out up here. This was the true warning sign that they're about to collapse and report terrible, terrible numbers before they even happened. And this is how you can utilize GAN and all the indicators that I use that are on my Patreon that basically tell us the warning signs before things actually happen. And sure enough, that was the warning sign. You got double confirmation of my GAN level and the Ichimoku cloud, and then things just collapsed. But now here we are, right? Here we are. So you can't be bearish on it anymore, right? You can't really be bearish on Dollar General anymore because it's back to a level. You even can draw a straight line going across right here, right? You can just draw a straight. You can see it was a resistance, 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 breakout, backtest, right? So essentially, you cannot be super bearish on it anymore. But what I think could happen is price could retrace back up to the bottom of this level right here. And then essentially price could get rejected. So maybe it goes back up to the 90s, right? And maybe it goes a little bit higher, 93, 95, whatever. Maybe even 100 again, back up to these previous lows. But I think what's going to happen is it's still going to be stuck under massive amount of resistance, and I think it's going to underperform the market. So it had a glorious run, right? It sure did, from the very bottom, from one, how low was that really? It was, yeah, from about $20 all the way up to maybe $260. It had a good run. Now it's back at 80 bucks. So you can't be short-term bearish on it anymore because it did smack that 45-degree angle perfectly. And now it's holding. So if you wanted to play a bounce to go up higher, that could be the opportunity to go back to the 90s or above. But I think there still is a possibility of even rolling over back down to this orange level around 57, simply because you look to the left, there's lots of candles right here. That was a previous resistance zone breakout, flipping it back to a support. So that could become a possibility. But it all depends on what happens here at this blue arc or even the top blue arc, right? Maybe it wants to go to 120 and then go down this avenue, right? So if these arcs and this angle ever get flipped to a resistance, kind of like how we saw up here, right? This angle got flipped to a resistance. If that happens here or with the arc and it comes back up and gets rejected and then comes back down, then breaks below, then we know we got a problem, right? Then this stock is completely broken and it wants to go much lower. But everything in my chart was predictable, right? And it all started right here when it lost that angle back in March of 2023. It was all downhill from there. That was the warning sign, right? And you can predict things before they happen. So this chart told us. Now, let's go take a look at Dollar Tree. And here's Dollar Tree on my chart. And what I really want to point out is how it is also at a support level right here, right? This is no coincidence at all. So what we see is kind of something similar to Dollar General. And this is the 45-degree angle again. You can see how important 45-degree angles can be over time. And even that orange level was very important for a long time. But this was all predictable, right? It was predictable when it was running up here. It flipped this 45 back to a support basically in March of 2010. Then it was straight line up to the blue level, came back tested it, successful back test. Of course, it wants to go higher after that. Sure enough, it did. Retested 45, get on top of the arc, and then it was tracing the 45, 45, and then boom, look at that. Bearish engulfing red candle, closing below an arc, closing below the 45. That was the first warning sign that it wanted to go lower, and sure enough, you could have got out right there, save a lot of money, and then maybe goes back and retest there. That would be your entry again, right? Things kind of want to go back and retest levels. That's exactly what it did. And then there was another point in time where things were getting pretty obvious that it wanted to go lower again. And that was when it was making its way, it flipped this arc back to a support, right? And it went up to this angle and it tried so hard. Again, these are monthly candles. It tried so hard to break this as a support and then it couldn't. And where was the warning sign? It was boom. Once again, that bearish engulfing candle. I like to call these confirmation candles because that's exactly what it's confirming, that this 45 is now once again resistance and just get out, right? You don't need to stick around anymore. And sure enough, it just went sideways for a long time, like many, many months, right? Basically from that candle, August of 2022 to August of 23. That was 1 year of sideways, right? Nothing. There was no point in being in that stock anymore after you saw that. And then look what happened. It just went and collapsed and then rolled over, right? It went back up to test some resistance and then it rolled over completely back down to support. Now, the question is, will this support hold? Well, maybe it will because I think Dollar Tree actually has a lot of cheaper prices than Dollar General, right? They still have things for $1.25, a lot of them, right? That's their standard price for a lot of the merchandise there. And that's still a lot cheaper than Dollar General. And I think Dollar General has lost its competitive advantage to Dollar Tree and other stores, even Walmart, right? Even Kroger's, I think sometimes Dollar General is not as cheap anymore, but Dollar Tree is still kind of cheap. So I think people still could flock there. But the thing is, you got to watch this level, $62, $63 right there. Got to watch $63. If $63 ever closes a month below it, then guess what? It's going to go to the arc down below, maybe the 30s, maybe trickle down, even down to the angle below. maybe in the teens or the 20s, right? So we don't know. So this level is super important to watch. But like I said, they do have more of a competitive advantage over Dollar General. So this level has a possibility to hold. So we can pull up the Ichimoku here and we can see that also some confirmation of things wanting to go lower, right? Really, when it lost the cloud, that was a sign that it was going to go retest lower support right there. And sure enough, that's what it did. So we can use that. We can even put on the SMAs there too. And what do we notice here? That it's even losing the 200-month moving average for the first time. Granted, there's 24 days left in the month, but if you go back in time, it's never really closed the month before. You can even trace this down lower, right? It's probably going to go there, and it's never, ever, ever been below that 200-month moving average. So this is a dangerous sign, right? I think realistically, Dollar Tree needs to close this month above 74.52. If it doesn't close the month above 74.52, I think it's in danger zone, right? I think it's in danger of breaking this level and it's in danger of going down. And maybe that's just a sign of that the economy is stronger than people think, that we don't really need the Dollar Trees or the Dollar Generals because we have the Walmarts, we have the Targets, the Krogers, whatever, right? We have those other stores to choose. So possibly we don't need this. So this is really, really interesting to watch. We'll see how this develops going into the end of the month. But 74.52, that's the target for Dollar Tree. And these charts look kind of the opposite of like a Walmart. So I'm going to show you Walmart right now. And here's Walmart again, and that's pulled up from the 70s, right? 1974 in December or November. So we're going to zoom out and we're going to just look at one level at a time. And essentially, it was like a straight line for the first couple of decades, basically, all the way up to maybe the 1998s. Then it got stopped out, right? It got stopped out at that blue level, and it stayed at that blue level since from 1998 all the way until 2011. Wow, that is over a decade, right? It's insane. So it stayed flat for a long time, but now look at this chart compared to Dollar Tree and Dollar General, right? Look at that. It kept going higher. And again, these are monthly candles. And look at what's happening on a monthly basis with this arc. It is trying to get on the top side of this arc and flip it to a support. And that is the exact opposite of a Dollar Tree. That is the exact opposite of Dollar General. It is flipping levels to support. They're not flipping levels to resistance, right? This is exactly what you want to see in this kind of stock, right? So yeah, maybe this huge company is taking market share from Dollar Tree, maybe it's taking market share from Dollar General, and so on and so forth. But the trajectory is up, right? It's been up since it confirmed that blue level of support, basically from July of 2010. It's just been going up and up, and it's flipping one level to support at a time. And you can even put on the monthly Ichimoku here, and you can see that it's really, really been exploding, right? It's been exploding way past the conversion line, and that conversion line even sits at 64.84. So is it possible to go back down there and test it? Yeah, if it really wants to get rejected by this arc, it'll go back down there and retest it. But if it wants to flip that arc to support, then this whole month is going to stay back above it, right? Maybe it'll wick below a little bit, but it's going to close the month above it. And that's how you're going to tell if this is really ready to continue higher or if it's going to backtest. So again, there's still 24 days left in the month, but this is a chart that is the exact opposite. And I'm going to just show you one more. I'm going to show you Kroger just to take a look there. And here's Kroger on the monthly chart as well. Again, these are all monthly charts, right? And that is from the bottom back in 1974, and it's the same thing, right? Market symmetry has been beautiful, right? And it kind of predicted this crash up here. Look at that. It was a strong monthly close in 1988. But then the next month in 1988, guess what happened? It just lost levels and kept going and going and going, and it finally found support at that angle. So pretty obvious with that. Also very obvious up here at this top in 1999. It was a combination of that blue angle sloping up and the blue horizontal level. It got rejected at that point. So obviously it wanted to come back and test support, and that's exactly what it did. Then it went up and got rejected at the blue. And you can see how well this works. It's like a map of your investment. You can see when to buy, you can see when to sell, you can see when to be happy and scared and all of that, right? You can see it. You don't need your emotions. You can just look at the chart and be like, okay, this looks great, or oh wow, I need to take notice. And once again, you can see that here. when price broke through this previous resistance, you can see resistance, resistance, resistance. It went straight up to where? Where did it go? Not a random place. No, it went up to this angle right here. And that angle was a support and now a resistance. So this was another warning sign to say, hey, maybe it's not ready to break out, so we can just find other opportunities. And that would have been good because from the top here in 2015, it traded down to sideways for years, right? Years, 2015 to maybe 2022, right? That was a long time, a long time. So there was not even a reason to be in this stock, right? For that time. But the trend is still up, guys. The trend is still up and it's still going closer to all-time highs. And sure enough, it's still approaching the bottom of that arc, and that arc sits around $61, $62, and I think that could be the target. So again, this chart is the exact opposite of a Dollar Tree or a Dollar General. So what is this really telling us, guys? I think it's kind of telling us that we don't really care as a society too much about Dollar Tree or Dollar General, or maybe their competitive advantage has gone because of inflation, so they are forced to be charging more to their customers, right? Or maybe the economy is just really stronger than what we think, right? We don't really know the answer, but we do know the charts, or at least I know the charts. And what the charts are telling me is that Dollar Tree and Dollar General are recession stocks, right? And in a recession, they do better. And right now, they're not doing better. So if they're not doing better, are we really in a recession? I don't think so. And the answer lies in all the other stocks that we're looking at, like these examples here with Kroger and Walmart. So I think what we need to do is just get rid of this recession fear narrative and just start to focus on the stocks that keep looking like this and start to make more money.